very excited to be moderating this panel with some of the most accomplished and biggest personalities, I think, on stage. I might have the hardest job here. So just quickly, by way of introduction, we have on the stage here today MJ Lytle of Janus, Henderson, and Tabula, one of the most recent launches of a tokenized fund on chain, on a public blockchain. We have Ahluwalia of Lumida Wealth, a wealth manager and prolific publisher of views on the market, which I follow very closely and suggest you do as well. We have Fabrice Grinda, who is a legendary angel investor, one of the most prolific investors out there, and both has exposure, obviously, on the VC side, and more recently launched a liquid fund as well as a tokenized Treasury product. And finally, we have Anthony, who I think needs no introduction. So excited to have this conversation here today. I want to start with a little bit of a backdrop here. A lot going on in the macro scene, both domestically and internationally. Topic of this panel is obviously the macro environment. Domestically, we obviously have an election coming up that there's a lot of speculation around, as well as the start of a recent easing cycle and some speculation around whether that will continue at the rate that it began. Internationally, we have a lot of geopolitical unrest, as well as recent events in Asia, both on the BOJ side as well as on the Chinese side, around QE or rate hiking. Some might say that this is the most important time for macro in crypto. Macro matters more than it ever has in the past. I want to give it to Fabrice first to comment on this. I think you might have a more contrarian view on this particular topic. Does macro matter more than ever?
So macro definitely matters in crypto, but I don't think this is the most important, the time where it matters the most. So the time it mattered the most was actually November 2021, right? The minute rates went up, crypto proved to be the ultimate risk asset, and we had essentially perfect opposite correlation between the Fed's funds rate and crypto assets writ large. So everything fell as the rates went up. But once we've reached the peak, you basically saw decorrelation between crypto assets and which started being valued on their intrinsic merits as opposed to all correlated to one. It's not to say the current environment doesn't matter, but actually what matters today is more the political environment, and others will comment on that rather than the macro, because the rates have essentially been flat, for the last 12 months. Then they started just declining with the 50 bips decrease. It's kind of priced in. There's expectations of further declines, but right now it's not the dominant. It's the political.
Ram, I'd love to hear your take on this as well.
I'd agree in the sense that the more people talk about macro, the less it matters. The Fed's cutting rates, the economy is growing, total employment levels are growing. What you have now is you've got valuations at the top decile with that backdrop, and it's justified for the reasons discussed. You've got productivity growth as well, so there's a lot to like. My view is that you have a Goldilocks setup. It's non-consensus, but that's the case, with all-time highs. But the impact for investors is investors are looking for novel, esoteric, idiosyncratic opportunities that are not priced correctly. Digital assets, I think, offers kind of two categories for that. One is tokenized culture. I'm very passionate about that. How do you make digital assets mainstream? I think it's tokenizing culture. It's amazing to see Scottie Pippen follow us up here, but people care about sports. They're not talking about.
That's why everybody's here, by the way.
Everyone's here for the Mooch and Pippen here. So. But how do you get culture on chain? How do you monetize that? How do you put those cash flows on chain? People care about that. That's one. And how do you put novel assets that are cash flowing, for example, royalties that link to, say, Taylor Swift's next concert on chain? I think that is the focus, and that's an opportunity to bring digital assets into the mainstream so it becomes a relevant conversation. Right now, digital assets are not relevant. It's just relevant to the people in this room. And if you want to make it relevant to a broader population, you got to appeal to their interests, and I think that is culture.
I feel like I'm on the Fox and Friends couch. I'm so happy that I'm not getting political questions. I'm sorry. Go ahead.
I was actually going to pass it to you next. I think you might have some takes on culture and politics and how that intersects with the on-chain economy. If you want to chime in on Ram's point.
So, to just bring up politics for a second, I think we're in a very good spot, actually. So, to play the contrarian a little bit, just think of the notion that you have one political candidate, like him or dislike him. He's talking pro-crypto. He's putting a team together if he wins that I think is going to be very favorable from a regulatory standpoint. You've moved the other side So if the vice president wins, she's given 2 speeches now and provided commentary in her position papers that are pro-blockchain and pro-crypto. I don't know how long people have been in the space in this room, but I can tell you if you asked me if that was going to happen 4 years ago, I would have said no way, it would never happen. I can remember Donald Trump as president sending out tweets that were negative on Bitcoin, and of course we've had to deal with Elizabeth Warren and Gary Gensler for the Biden administration. But I think better days are ahead from a regulatory environment, which means irrespective of what happens in the macro, and I'm more in your case, Ron, by the way, where I actually think we're in a little bit of a Goldilocks period that has everybody nervous, but the Fed is actually sticking a soft landing. And if that's right, plus the regulatory stuff, it's a great opportunity to own these assets.
So I think this is a great transition to what I wanted to talk about next, which was on the Fed side. I think a natural question to be asking in this context is, what does a world look like for RWAs and for tokenization specifically, which has mostly been, frankly, tokenized T-bills and treasuries and bringing this sort of government yield on chain. What is that world where we maybe have lower rates? Perhaps we go all the way back down to where we were before. That seems perhaps unlikely. But certainly if rates go down, then these T-bill products become less competitive. What does a world look like where rates are lower? And MJ, I'll pass it to you.
So I think it's quite obvious that if rates are lower, we have to be smarter about the investments that we're making, and we have to look where we can find low volatility, higher credit returns. JAAA, I'm from Janus Henderson, so we have a very large AAA ETF that's exploded in the last year, and we kind of scratch our heads on why, and it really is because short duration, big spreads. And I think that's we're already having these conversations in the crypto space. Obviously, treasuries are the natural thing to start with when you're starting to digitalize assets. But there are a lot of very liquid fixed income assets that you can digitalize quite effectively, just following on from the model of what we've done with treasuries.
And by the way, look, there's 170 billion of stablecoins out there that are non-yield bearing, USDT, DAI, and USDC. There's only 2.3 billion of tokenized T-bills. So even in a rate environment where who knows what the terminal Fed funds rate is, 250, 300, 350 basis points? Most of it should be tokenized. So it will remain the largest category, though I agree, other categories of assets will come on chain, and I suspect as people start chasing yields, so in a bull market, which we're not yet in crypto, people will want things like the basis trade, which Athena has popularized, or starting to find yields on BTC, or doing levered long trades on different asset classes.
I think you'll see more speculation, right? At the bottom of the bear market, I remember I had a dinner in October 2022, and it's all crypto natives, and they were learning how to invest in treasuries directly and participating in the auctions. That was clearly the bottom of the market. You're going to see the opposite.
Did you direct them to Treasury Direct?
Well, that's when I started buying equities. I said, clearly it's the bottom of the market. But the other side of this is, think about like 2021, when you had the rise of NBA Top Shots, for example. Again, sports culture on chain. That's where I'd like to see the category. That's right. Like, no one's in digital assets to earn 3% on chain. That's transaction fees. That's gas fees, depending on what chain you're on, right? People are going to invest in more speculative assets. I hope it's in the direction of cash flows tied to, like, say, David Bowie bonds. Institutional investors can do that. When I was at Merrill in 2006, we securitized, put that on chain, and unless you're a SkyBridge or an institution, you as an investor cannot participate on that due to antiquated SEC regulations, so have to be revised. If we can create a framework around that, then you can create a pathway for Americans to bet and invest and underwrite in other Americans based on their taste, and help promote those Americans based on their social media.
I'm surprised to hear you pushing culture, Ram. I thought Anthony was going to be on talking about sex, drugs, and rock and roll, but go ahead. It sounded like you were going to say something.
Oh, I mean, I don't know how much more I can add to all that. I think it's all terrific, but I would say this to you, it's going to happen faster than we think if we get the regulation right in the United States. And so if we're sitting here a year out and we know what a token is and we know what a security is and we know what a commodity is, this is going to move lightning fast. And for me, if I could get clients to buy that, or you could go on chain and have the CYA and the AML figured out already, or there's something like Kinto or something like Ondo, it's just such an easier sell. You're going to shorten the selling cycle, and you're going to give people an opportunity that only the really rich, the institutions, the big family offices had. And I think it's fantastic.
I think it's the next stage of democratization of investing, right? So ETFs over the past couple of decades have all been about normalizing fees, so everybody gets the same fee, and then making it broadly available. This will take it another step further and take it out of the national sphere, right? Because right now, ETFs are based on fund structures. Fund structures are nationally regulated. This actually takes it away from that. I spent all of my time negotiating with the Central Bank of Ireland, the Central Bank of the Luxembourg Exchange, trying to get them to agree to stuff, which is nuts, right? I should not be negotiating with a bunch of bureaucrats. I should be doing something far more, market-driven.
MJ, can I ask you, so if I'm right about the regulatory environment, is it possible to tokenize a hedge fund? Is it possible to give a small investor a return off of the basis trade?
I mean, there are people doing that today with the basis trade.
You can do it. You just have to be very careful about the liquidity you offer them off the back, because the mistake that was made about 15 years ago was trying to take hedge funds and deliver them to people as daily liquidity vehicles, and there was no liquidity in the underlying.
Right.
And then you're just driving yourself down a dead-end street. If you make the liquidity provisions in line with the underlying assets, then you're fine. So if you have monthly liquidity, quarterly liquidity on something that's in line with the underlying assets, from a structuring perspective, that works.
I want to go back to a comment that Fabrice made about treasuries and stablecoins. And I think something that I've been thinking about is T-bills have sort of emerged, or tokenized treasury funds have emerged as this separate category, as distinct from stablecoins. Obviously, the recent Bridge acquisition has supercharged interest in building out stablecoins. I think the space is already becoming very competitive and will continue to become so. But one thing I've thought I don't have a good answer to, so I'll ask you guys, is do you see these tokenized treasury funds and stablecoins as converging into the same product? We now have this category that is yield-bearing stables, which is then actually distinct if you look on DeFi Llama from tokenized T-bills, and really perhaps they're the same thing. How do you see these as being basically two separate categories, or converging into a single one?
I suspect they will converge, right? So first of all, the checking account, saving account distinction you have in your bank is a means of your bank to make more money. It's not logical, right? There's no reason that in one case you're earning yield, the other case you're not earning yield. The reason USDC and USDT are not giving you yield, obviously they like making the spread, but actually it's a regulatory historical reason. The stablecoins are treated separately, and they're not deemed to be securities because they're not paying interest. And so, but in the long run, there's no reason you should not be paying in a yield-bearing instrument. And so I actually suspect that over time, more and more volume moves away from the non-yield-bearing to the yield-bearing. And I actually suspect that the disruptors, for a combination of legal and regulatory reasons, are going to be able to take a fair amount of share, because it's going to be harder, I think, for USDC and USDT to actually provide yield in a legal way versus people that come on. So Midas, in our case, we went directly MiCA, MiFID compliant from the get-go, and we're fully regulated, allowing us to do this. And others are doing the same thing.
I think you'll see more specialization, diversification, actually, right? Driven by two things. One is regulatory. You're going to have U.S.-based approaches that are compliant. In the U.S., you cannot offer yield in a stable coin because it might be deemed a money market fund, which deprives customers of that kind of value. And then you have a non-U.S. regime. Then you also have specialized use cases, for example, facilitating B2B payments or financing working capital. Maybe I want a stablecoin backed by JAAA ETF because, back in the 19th century in wildcat banking, banks would compete on the yield, but that yield's generated by taking some risk-taking activity. Maybe I don't want treasury bonds. Maybe I want it gold-backed. Maybe I want AAA CLOs. So I do think you'll actually see, or different currency pairs. So I think you'll actually see more specialization for different customer groups and not a proliferation, but an increased number of these stablecoins.
It also doesn't make sense to create and deconstruct investments just to get cash out of them. So like today, if you want to get your cash, you have to go to the bank and ask for it. You have to sell your ETF or whatever to get the money. What if you could just post that security against getting cash from someone? And so you basically kept the same investment and moved it around the system. That would be possible if you don't have all these barriers. I mean, in the UK, we have a system whereby you go on one platform and you gain access to 50 banks, right? And then you can automatically give money to the bank that has the highest interest rate because obviously you have the FDIC equivalent up to £85,000. But that's nuts. Like, why are we setting up platforms to get around badly regulated and moved around cash, right? So I think a lot of what we're trying to do here is get to a more rational approach to getting a hold of value and moving it between investors.
On Rom's point, just from my perspective as a DeFi builder, the specialization point is a good one. Fundamentally, what you're serving from a tokenized Treasury product, you're serving often a DAO or an on-chain institution that doesn't care if the underlying, ERC20 in the case of an EVM chain is actually accruing value, is becoming larger. The denomination is no longer a dollar. Whereas obviously if you're trying to integrate within DeFi and you want a stable coin, the thing itself should always be equal to a dollar. So that makes a lot of sense, I think, both from a regulatory perspective as well as from a builder perspective. If you're a DAO versus a DeFi product itself, you'll have different priorities.
The big opportunity is, can someone find a wedge and take some share from Tether, which is the most profitable non-bank in the world? That's the opportunity. Like, why isn't Tether paying yield?
They're not
Well,
paying
we know
yield
why they're
because
not
they're
paying
not
yield. It's
allowed to.
illegal.
They don't have to.
But in the non-US context, right? Why aren't they paying yield? That's an opportunity for some issuer.
So I want to shift gears a little bit towards the macro. Going back to something I mentioned earlier on the sort of what was going on.
Can I answer that question, though?
Sure, you can answer that question
Okay, so
in the spiciest way possible.
So think of it like a Cyprus bank, and I think you'll get the reasons why they don't have to pay yield.
They're custodied at Cantor Fitzgerald. Look, I'd like to see more audit, but they are custodied at Cantor, right?
But their balance sheet is custodied there, but the people buying into Tether, you don't.
So it's
you
the
don't know
end
where they're
customer doesn't meet the standard to take receipt of the
No,
yield?
I think when you get a fully regulated, meaning a fully U.S. or EU regulated Tether, then I think you'll have a construct where you'll be able to have a yield-based product. But you may or may not remember this, but I think it was 10 or so years ago, maybe MJ can help me with this, where the Cyprus banks just said, okay, we're haircutting everybody's account by 10%. Do you remember that? Everybody said, okay, that's great, thank you, and then let's keep going.
It's just running the laundry, right?
All right, back to macro.
No, but by the way, that's not I'm not trying to besmirch Tether's business model because they have arguably the best business model in the world. It's just outside of the regulatory reach of the United States, a result of which they are giving services to people that they don't need to give them yield for.
Yeah, I think they're also probably protecting themselves by not offering the yield because you start to venture into a different category if you're offering yield itself. So it's both in their regulatory interest as well as in their financial interest not to offer it.
It is a good idea. Maybe you and I can work
Yeah, we'll figure it out. There's an opportunity for someone in this room.
All right, you guys can scheme in the green room.
Look, we're all attacking the category, but it's essentially a marketplace, right? They are on all the centralized exchanges or all the decentralized exchanges. They have liquidity in all the liquidity pairs. And so we can create our yield-bearing stablecoin. We can give 100% of the yield until we have liquidity in the liquidity pairs and we work with market makers, et cetera. It's going to take a long, long time to displace, though we're all working on it. I mean, many people are working on it.
Indeed. All right, so just shifting gears back to some of the broader macro stuff, I want to focus on Asia and specifically on the yen carry trade unwind, which I think took a lot of people by surprise in August. The August 5th drawdown was brutal for a lot of us. And I want to frame that in the context of maybe anything else that we might be missing. In retrospect, the yen carry trade unwind and the impact on the markets was predictable in some sense, but took a lot of people by surprise. Is there anything that you guys think that we're missing, either from a broader macro and market impact perspective, or something that might blindside us in terms of industry impact more broadly?
I think the left tail risk to consider next year is, do you see a renewal of inflation? Look at the producer price index at 3.6%. It stopped declining. Shelter costs are still elevated. And if the Fed's cutting rates into Goldilocks, we'll probably pay some of the consequences of that next year. I don't think that's a this year problem. The yen carry trade, it happens every few years. It's hard to see when it happens, and then you kind of move on. And Warren Buffett does yen carry. He just issued notes in Japan at a 1% yield 2 weeks ago. So if you match your assets and liabilities and you have permanent financing, so you can't get a margin call, that strategy can work. Again, that's an institutional strategy. That's beyond the reach of different investors. But I wonder if you can put that on chain somehow. We'll have to figure that one out later too. So add that to the agenda.
Well, people were taking out mortgages in yen about 15 years ago, right? So people do it at a retail level. I think the problem is figuring out what is a bet that you believe is foolproof. I mean, yen has been bouncing around between 140 and 160, which makes everyone wonder, purchasing power parity is 110. And yen hasn't stayed that far from purchasing power parity since the 80s. So the question is, there must be a pull back to this, and what's your time frame? The problem with the carry trade is, if you get called on it and you don't have the ability to stay levered to it, I think some of the opportunities are in Europe because, frankly, the US is too hard to figure out. I have an American accent. I've been based in London for 34 years, and I watch this place and listen to the podcast and think, what the hell is happening to the United States? And, that may not impact the value of economic assets.
So can I just jump on that for 1 second? What MJ's saying that has me worried, and it's not really a black swan because it's a known swan, is that there is unrest in the country. There is 25% of this country that feels left out of the system. There are people I grew up with on Long Island. We were in sort of a aspirational blue-collar community. People thought they were going to do well. You travel the country, which I have traveled. I did 71 campaign stops with Donald Trump. I was on the road this weekend in Pennsylvania. Many of these families now feel economically desperational. They went from economic aspiration to economic desperation. And we may not feel it on Wall Street. We may not feel it at the William Vale Hotel, but they feel it. And if you get to a tipping point, you could have political unrest in the country. And I'm not talking about what happened on January 6th. I'm just talking about people giving up on establishment candidates. And by the way, the two candidates running right now, they are establishment, whether you like it or not. They both are saying relatively establishment things. But you could end up with some type of radicalism in the country if we don't fix this socioeconomic problem.
Yeah, I think probably people are, not to speculate excessively, but underestimating the probability of some sort of black swan unrest or extreme unhappiness if a particular candidate wins.
What I would say to everybody in this room is just be very, very careful that you're not picking up the collective biases of the people that you're hanging out with. Go to places in Pittsburgh, outside of Pittsburgh, go to places like Youngstown, Ohio, and you will see a different type of America than you see here in Williamsburg or Midtown Manhattan or, frankly, places where affluent communities are.
What do you think is the worst possible outcome that's within the realm of possibility for the next couple weeks? Let's say post-election, it's highly contended. What's the worst you think it can get that's not highly likely?
You mean if Trump loses, does he start a civil war?
I don't know. There's some, it's highly contentious. People don't agree. I mean, it's worse than last time.
So I'm a contrarian on this, actually, so just hear me out for 1 second. I think if Trump wins, the Democrats are not going to contest it, and Joe Biden will actually show up at his inaugural because he's a traditionalist and an institutionalist, and so even though Trump didn't show up at his inaugural, he will do that. And then, we could talk about Donald Trump, but you don't have enough fucking time on the clock for me to do that, so we won't do that. But you guys are cheaper than my therapist, so maybe I'll stay later. But on the Harris side, if she wins, I am a contrarian. I do not think Donald Trump is going to contest the election, and people think I'm crazy. They think he's ready for civil war, and he said there'll be blood in the streets or a bloodbath. But there's a specific reason why, and that is he doesn't want to go to jail. And he has a sentencing overhang on the 26th of November, 3 weeks after the election. And if he starts his bullshit, they're going to put his ass in jail. And I can tell you something about Trump. I know him a long time. Going to jail and bending over for the soap bar in the shower, not something that Donald Trump wants
not
to,
his thing?
not something that he wants to do.
Shocked.
So he is not going to contest the election if she wins.
Do you have a view on who wins, where we stand today?
Okay, so anybody that says they know who's going to win and all this sort of stuff, they really don't know who's going to win because there's so much misinformation out there. There's so much misinformation in the polling. I spent the weekend in Pennsylvania canvassing, and I'm gonna build a case for why I think she will win, and then I'll tell you why he could win. Okay, she could win because this is a get out the vote election, and this is meaning there's very few undecideds. If I can get my team to the polling booth, or I can get my team to mail in their, early ballot, I'm gonna win. She's outmanning him right now, 300,000 volunteers, 55,000 in Pennsylvania, 300,000 volunteers in 7 states, and she's outmoneyed him 3-1. And they are very, very well organized, and the Democrats are known for early voting. Okay, so if you're just looking at it from that thing, she could win. Where he could win, okay, is that she started on July 21st, and her narrative isn't completely formed. And so there's an unknown about her, and people have a tendency to be nostalgic. They'll look back at him and say, hey, wasn't so bad. He's not going to end democracy. I can't understand the love affair of Vladimir Putin, but I'm sort of okay with him. Okay, and so he could win. So the question is, who's going to bring more people to the ballot box? I think she will, because she has more registrations, she has more personnel and more money. I'm not talking my book because I like her and I've endorsed her, but I think it's close. And I don't think there's anybody with a straight face that could tell you who's going to win this election 2 weeks prior to the election.
But isn't she doing an unspoken deplorables thing where she's running as an anti-Trump? And I mean, you've said yourself that
her narrative is not fully formed.
Right.
Yep.
That if she stood up and made a strong statement, it's more likely to have a positive impact than somebody will go, I knew it, I can't.
So, I helped her on the debate prep. I was in the spin room for her. And I have said repeatedly that she needs a speech. She needs a visionary speech and a defining speech. Obama did it in March of 2008. He had a problem with this reverend called Jeremiah Wright. There was some tension about Obama's racial identity. He gave a speech that settled that issue. In the 1960s, as hard as this is to believe, people were worried about Jack Kennedy. They said he was a Catholic and the Pope was going to run the country. He went to Houston. He gave a speech about the secularity of his positions in politics. I said that she needs to get to a podium like that and make a speech about who she is and where she wants to take the country. And I said, you should make the speech Project 2047. Okay, not Project 2025. This is Project 2047. Why 2047? That's 100 years after Jackie Robinson crossed into the baseball diamond and broke the color barrier in professional sports. And 100 years from that day, what type of society are we going to be living in? And talk about a visionary, unifying society where we're less about race and sexual identity and all these different things. And if she did a speech like that, I think she could beat his ass in. But she's afraid to give that speech. Why she's afraid to do that, I don't know. But I would want her to do that, and it may or may not be too late.
What do you think is Trump's rallying cry?
Trump is remembered still, believe it or not, okay, maybe not from this group in here, very high information voters, but low information voters who ultimately decide these elections, they know Trump from The Apprentice. They see Trump as a very strong business leader, and they see Trump in his physique, even though he's got the lifts on, the girdle, and the orange war paint. I mean, it's effing crazy, okay, but they see him as like a strong leader. Okay, so his identity is tied to those sorts of things. But when you ask about the tariffs, very regressive. I mean, you want to put a hurt on the bottom 25% of the country, let's go with these tariffs. Okay, because the people in this room can afford the tariffs. It'll eat up some of your disposable income, but it won't eat up all of your disposable income. Okay, and there's so many things he's set up to do that are so harmful to the people that he's supposedly representing. But that's what he stands for. But someone will have to explain to me at some point, none of us could figure out, McMaster, Kelly, Mattis, what is the love affair with Vladimir Putin, and what is the love affair with the adversaries to America, and why are you always coming to the game locked and loaded with KGB talking points? Why are you doing that exactly when we spent the last 100 years rejecting that? What's that?
Well, not to take maybe a partisan position here, but I think in general, at least from like an international peace perspective, we didn't get into any new wars
Okay, but you see that, okay, we're
We're in a pretty strong.
We're going to have a debate in the last
we
minutes.
have 3 minutes left.
But that's categorically not true, because he did several things in the Ukraine that slowed down the armaments. So we had from 1994 to 2017, we had something called Operation Porcupine, where they gave up their nuclear arsenal. They were the 6th largest nuclear arsenal in the world, and they gave it up for security guarantees that were sanctified by the United States and NATO. Trump slowed down those arms, and he created a space for that invasion. They tried to catch up and resupply the Ukrainians, but it was a little bit too late.
So I think we could probably have a much longer discussion on geopolitics and the impacts of the various presidential candidates.
Go back to the real
on-
world
One quick
assets.
comment,
Okay?
just to bring two threads together. We started
Sure.
off talking about the need to democratize offerings, because the top 1% do have it very good, and it's an unfair fight, in part because of access to alternative assets and better strategies and tax advice. That's one. The second thing is, like, what this group in this room can do is build investment products that are actually responsible, help people make money. I have a nanny. She's from Haiti originally. She says, Ram, should I buy this coin? I'm like, no. You're going to be on the wrong side of every single trade. You're going to get hosed. But if you can put assets on chain and democratize alternative assets and other strategies, that addresses the grievances that people have about being left behind, because they're not investing in stocks. They're trying to create wealth quickly, and they're going to be on the wrong side of that when they attempt to do that.
So we have very little time left. I want to just go around. I think Anthony had quite a few controversial takes, but I want to give each of you guys the floor briefly to give your most hated take, throw a little bit of spice in there, and then maybe it'll generate some interesting conversation after the panel. Whoever wants to go first. I'm going to give it to Fabrice first.
I've exhausted my time.
Yeah.
I'm not sure I have that controversial takes. Look, all these things to me are exogenous to the system. So maybe this is it. Everyone's like over focused, are there real geopolitical risks in the world? Absolutely, right? There's going to be escalation in the Middle East with Israel bombing Iran. There's risk in the South China Sea. There's further risk in Ukraine. There's political risk. There's unrest. And in the short term, all these things, of course, impact our asset prices. But that's not what we're here to do. What we're here to do is basically reinvent the plumbing of the financial system for the 21st century. And ultimately, all these things are not going to matter. What matters more is, are we creating an extraordinary new wave of products that are better, faster, cheaper, and more inclusive for everyone to use? And so I'd take a step back, and even though everyone's obsessed with these geopolitical, political, and macro decisions, in the long run, they don't matter.
Hated take. The union of crypto and AI is mostly hype and overrated. It's not real. I support the principles of it: decentralization, decentralized compute, supporting privacy. I just don't see how that's going to get real traction because of the engineering that's required to make that happen.
I just think a lot of the sort of top-down comments that we make are kind of irrelevant to the daily lives of most people. I think the way to create stability is to get more wealth into the hands of the average person. That's why I talk about democratized investments. That's why, one of the things we experience when you talk to kids coming up through high school and so on is they have no idea how to invest, and no one explains it to them. If their parent is in finance, then they learn something. My kids call me up and say, I have some cash, shall I buy some more VU, right? They want to buy the S&P 500. That is a relatively small part of the kids' population. I think if you can target the sort of 12 to 22-year-olds, teach them how to save and how to invest. Not save and get 5%, but how to have a mixture of different assets so that over time, when they have extra cash, they don't go and blow it clubbing. They put it back into an account, and then they're surprised 10 years later what it's accrued up to. Then you're going to have a generation of people who feel more stable. I mean, I remember hearing something about Americans that the average person doesn't have $600 in their bank account, right? If something happens, like they get a parking ticket or whatever, all of a sudden they're out for the month.
Agreed, but I'm not sure that's contrarian. I mean, everyone agrees.
All right. Thanks all for listening. Wonderful conversation with all of you. And yeah, hope you have a great rest of your day.
Thank you, guys. Thank you. Good to be here.